You saw ARM getting a big pop today in its debut. The chip design company controlled by SoftBank jumped more than 10% in its first day of trading. The company is valued at nearly $60 billion. Seana, that's a big boost for SoftBank when you consider they bought that remaining 25% stake recently from Vision Funds at a valuation of roughly $64 billion. They're cashing in roughly $5 billion from this IPO. But, interesting take from Jeffrey Kleintop earlier, because so much of the conversation around ARM has been a successful debut will unlock sort of the pipeline for IPOs. He seemed to think this was more about an AI play. This doesn't necessarily mean that there's a lot of enthusiasm for IPOs, at least not on the level that we've seen in past years.
Yeah, we'll see. Instacart, which we're expecting next week, is also going to give us another look just at investor appetite for IPOs. If it does, in fact, go beyond some of the AI plays in the AI sector that Jeffrey Kleintop thinks is one of the reasons why we saw such a strong debut here for ARM, with the stock closing up nearly 25%. But we know that AI is a pretty key market here for ARM, just the exposure to AI. The company has been playing up that, at least in terms of the roadshow and trying to get investors, institutional investors, excited about the name. But when you take a look at the valuation right now, the fact that we did see such a pop in its public debut, I think some people are starting to question, or have been questioning a little bit, given the slowing rate of growth that we have seen, given the 1% revenue drop that we've seen in ARM in its most recent quarter. So we'll see whether or not some of the enthusiasm sticks around here beyond the first day of trading. Let's take a look at Delta, because shares closing the day off just about 0.5%. Now, the airline cutting its third quarter profit forecast, citing increased fuel expenses because of supply cuts by Saudi Arabia and Russia. Delta is also overhauling its loyalty program. Passengers will no longer earn status based on the number of miles they fly, but they will earn their status based on the amount of money they spend with the airline. The airline also putting a cap on how many times Amex Platinum and Platinum Business card holders can visit their Sky Clubs per year. Basic economy ticket holders will not be allowed in their lounges, regardless if they carry any premium card. But Akiko, let's talk about the profit cut there, because this has certainly been a trend amongst the airlines. Delta joining some of their peers out there. We heard from American earlier this week, Southwest, Frontier, Spirit, among the names here, warning that higher fuel prices are going to impact their company, at least in the short term. To what degree, though, is the question.
Yeah, and that's still to be determined. This also coming at a time when we have seen some signs of slowing here, looking into this next travel wave going into the holiday season. How much are Americans willing to shell out on travel at a time of higher costs? You mentioned some of the other airlines where we saw their forecast lowered. American Airlines, we saw that stock 4-month low yesterday on the back of the company lowering its forecast, higher fuel prices. They also talked about cost tied to new labor agreements. Spirit, also another one. But Seana, while we are focused on higher fuel costs and the impact, I would argue the announcement coming on mileage is going to get a lot of people really upset, because, as you know, there's been a debate for some time about where those points should be earned. We know airlines have been moving in the direction of the cost of the ticket as opposed to the miles traveled. But I know a lot of people who rake in a lot of miles every year are saying, well, no, wait a second, that should count for something.
Yeah, I would be pretty upset if I was one of those people. Delta is not my airline, but if it was, I would be upset by this change.
Yes, I do keep loyalty points with Delta. But moving on here to another stock we're watching today, that is Yum China. That stock up more than 5%. The company that operates Pizza Hut, KFC, and Taco Bell restaurants in China held its 2023 Investor Day and outlined its RGM model, also known as resilience, growth, and moat. The plans include leveraging flexible store formats and strategically partnering with franchises to expand into more locations. This is a pretty aggressive plan when you look at the numbers that have been put out by Yum China. They say they plan to build a 20,000 store network in the country by 2026. They're at 13,600 now. And of course, when you think about the Chinese market specifically, we have seen a slowdown in the economic growth there, concerns around to what extent consumers are willing to spend. So, that's adding to the pop in the stock, the fact that the company seems fairly optimistic moving forward.
The company's optimistic. The company's pretty confident, at least for now, that they are going to be able to reach some of those growth targets here over the next couple of years. Now, fast food has been one of the very few bright spots when we take a look at China, where consumers have continued to spend some of their money. But given the fact that we have seen such a sluggish recovery there, given the fact that we don't really see any real catalyst, at least in the short term, that is a risk here for Yum China, given the fact that they do have very lofty and very aggressive expansion targets here over the next couple of years. Whether or not they're able to weather some of those challenges over the next couple of years, we'll find out pretty quickly. But despite all that, again, Yum China aggressively expanding the number of stores, planning to build a 20,000 store network in the country by 2026.